Biomed, Nexus Daily Updates, your essential biotech, medtech, and pharma recap. No noise, just what matters. TLDR with Atai-Beckley, Lilly has now acquired 11 drug makers in 2026, by far the most among its peers. That is on top of a stack of licensing deals, making it the most aggressive buyer in the industry by a wide margin. Q2 earnings season ramps this week, and after J&J's soft open, the prints will test whether the sector is as healthy as the mood suggests. Late July brings two binary readouts worth watching, led by BMS's KarXT in Alzheimer's psychosis, the clearest test yet of its 14B Karuna bet. ESMO abstracts are starting to surface, teeing up the fall's biggest oncology meeting. The type 1 diabetes field is making real progress toward insulin independence, per a Biospace look at a pipeline that has quietly matured. Executive takeaway quieter news day, so it is a good moment to step back and appreciate what Lilly is doing, because the scale of it is genuinely without precedent. Biopharma Dive tallied it cleanly. With the Atai-Beckley purchase, Lilly has now acquired 11 drug companies outright in 2026, by far the most of any pharma. We have been loosely calling Atai-Beckley Lilly's 15th deal, and it is worth being precise about the difference. 11 of those are full acquisitions of companies. The rest are licensing deals and collaborations like Haisco and Nabisco. Either way you count it, no one else is close. Lilly has turned M&A into a continuous operating function rather than an occasional event, spanning obesity, oncology, cell therapy, gene editing, vaccines, pain, and now psychedelics. The strategic question this raises is no longer whether Lilly can find deals, it is whether Lilly can integrate and execute across this many therapeutic areas at once. Every acquisition adds programs, people, and complexity. The company is betting that its balance sheet, powered by the GLP-1 franchise, lets it place more shots on goal than anyone else and absorb the misses. It is a defensible bet while the obesity cash keeps flowing. The risk is the same one we flagged with Vertex's quieter diversification. The more areas you enter, the more the strategy depends on execution rather than selection. For now, Lilly is the clearest expression of where the whole industry is heading, using deep pockets to buy the innovation it needs rather than wait to build it. On the week itself, the thread we set Monday runs through earnings. Q2 season ramps over the next 2 weeks, and after J&J opened with an oncology miss, each print is a test of whether the record deal-making and buoyant mood are matched by actual performance. Layer in a couple of binary readouts, and it is a week where the numbers, not the narrative, do the talking. Read full analysis. Deal-making, no one in pharma is buying like Lilly, and it is not close. LLY Biopharma Dive tallied that with its Atai-Beckley purchase, Lilly has acquired 11 drug makers in 2026, by far the most among its peers. Add its licensing deals and collaborations on top, and Lilly is the most active deal-maker in the industry by a wide margin. The acquisitions span obesity, oncology, cell and gene therapy, vaccines, pain, and now psychedelics, a breadth no competitor is attempting at this pace. The engine behind it is the GLP-1 franchise, which throws off enough cash to fund a continuous buying program. The open question is integration. 11 companies is a lot to absorb in 7 months, and the strategy now depends less on finding good assets than on making them work inside one organization. For competitors, Lilly's pace is setting a bar that reshapes what the assets are worth, since every target knows the most motivated buyer in the market is always shopping. Earnings and readouts. The week belongs to the numbers and a couple of binary bets. Q2 earnings ramp this week, and the thread we are tracking is whether performance backs the mood. J&J opened soft with an oncology miss, and the big pharmas reporting over the next 2 weeks will show whether that was a one-off or a sign that the flush headlines mask uneven businesses. Beyond earnings, late July brings binary readouts, the most important being BMS's KarXT in Alzheimer's psychosis, which is the clearest test yet of whether its roughly 14B Karuna acquisition pays off. A win validates a big bet in neuropsychiatry. A miss reopens hard questions about the price BMS paid. PTC's sepiapterin readout in PKU is the other mid-cap binary worth watching. On a week light on deals, these are where the real stock moves live. Oncology ESMO is coming into view. Companies are beginning to announce their presentations for the ESMO Congress 2026, the fall's biggest oncology meeting, with early disclosures like ORIX EGFR lung cancer data starting to surface. ESMO tends to be where the year's important cancer data lands after ASCO in the spring, and this year it will be a venue for the RAS programs, ADCs, and China-originated oncology assets we have tracked all year to show their next round of data, worth marking the calendar as the abstracts firm up. Diabetes, type 1. Diabetes is quietly closing in on insulin independence. A biospace analysis found the type 1 diabetes pipeline is making remarkable progress toward functional insulin independence, driven by cell therapies that aim to replace the insulin-producing cells the disease destroys. It is a reminder that alongside the GLP-1 noise in metabolic disease, the harder problem of curing type 1 diabetes is advancing. Vertex is among the companies furthest along with a cell therapy approach, part of the diversification strategy we covered when it bought Crinetics. A functional cure would be one of the most significant advances in metabolic medicine in a generation, and the field is closer than it has been. Coming up, this week and next, Q2 earnings season for Big Pharma. Late July, BMS KarXT, Alzheimer's psychosis readout, PTC sepiapterin PKU readout. July 22nd, comment window closes on the FDA expedited IND pilot. July 31st, Section 232 pharma tariffs effective for large companies. August 2026, Replimune RP1 FDA response. Read full analysis Biomed Nexus Pro institutional intelligence brief. Lilly's integration problem in waiting. 11 acquisitions in 7 months is a staggering pace, and the risk it creates is not on the buying side. Lilly has proven it can find and close deals. The question is whether it can make 11 newly acquired companies function inside one organization while also running the biggest product launch machine in the industry. Integration is where acquisition strategies usually break. Each acquired company brings its own programs, scientists, culture, and operational debt. Absorbing 1 or 2 a year is manageable. Absorbing 11 across therapeutic areas, as different as psychedelics, vaccines, and cell therapy, strains even a well-run organization. The programs have to be prioritized, the talent retained, the timelines held, and the whole thing managed without distracting from the GLP-1 franchise that funds it all. The bull case is that Lilly is not really trying to integrate these as unified businesses. It is buying optionality, placing many bets, and letting the winners emerge, using its scale to absorb the failures. If that is the model, integration matters less than portfolio construction, and Lilly can tolerate a high failure rate as long as a few of the 11 pay off big. That is a venture-style approach executed at big pharma scale. The bear case is that complexity compounds quietly. Acquired programs that do not fit get deprioritized and written off. Talent leaves when their programs stall inside a giant. And management attention, the scarcest resource of all, gets spread thin across too many fronts. None of this shows up in a quarter. It shows up years later in a pipeline that produced less than the acquisition spend implied. Our read is that Lilly has earned the benefit of the doubt on execution, but the 11-company pace is the thing to watch on the earnings calls, not the deal count. Listen for how management talks about integration, program prioritization, and pipeline rationalization. The buying is the easy part. The next 2 years of making it work is where this strategy gets judged. KarXT, A 14B referendum BMS's KarXT readout in Alzheimer's psychosis is one of the most consequential mid-cap scale binary events of the summer because it is really a verdict on the roughly 14B the company paid for Karuna Therapeutics. KarXT, now marketed in schizophrenia, represented a new mechanism in neuropsychiatry, a space that has punished drug developers for decades. BMS paid a large premium for Karuna on the thesis that the drug could expand well beyond schizophrenia into other neuropsychiatric conditions, including the psychosis that affects many Alzheimer's patients and has almost no good treatment options. The Alzheimer's psychosis readout tests that expansion thesis directly. A positive result does two things. It validates the Karuna price by opening a large, new indication, and it strengthens the case that KarXT's mechanism has broad applicability across neuropsychiatric disease. That would be a meaningful win for BMS at a moment when it faces patent pressure on its older franchises and needs its growth bets to deliver. A miss cuts the other way. It would narrow KarXT to schizophrenia for now, raise questions about how much of the 14B was justified, and add to the long history of neuropsychiatry disappointments we have chronicled this year, from Neumora to the Alzheimer's failures. It would not sink the drug, which has a real schizophrenia business, but it would deflate the expansion story that justified the premium. For the broader field, this is another data point on whether neuropsychiatry is finally becoming tractable or remains the graveyard it has been. Coming alongside Biogen's mixed Tau data and the psychedelic momentum behind Lilly's Atai-Beckley deal, the KarXT readout will shape how investors price the whole CNS space heading into the fall. Coming catalysts: Q2 earnings roll out over the next 2 weeks. Late July brings the KarXT and sepiapterin readouts. The full catalyst calendar returns Friday. Lilly has bought 11 companies this year and shows no sign of slowing. The week's real story is the earnings prints and a couple of binary readouts, and type 1 diabetes is quietly closing in on a functional cure. What are you watching? Reply to this email. Visit the Pro Hub. Read. Full article sponsorship slots for 2026 are limited. See packages and pricing. New Biomed Nexus signals weekly sales intelligence for life sciences. BD teams. Learn more.